I'm the only one I know that has flipped one unit 3 times in less than 6 months. People perform or they act on their incentives, not on their values. Everything I touch turns to gold. Bullshit.
Too often we think that a W-2 is secure. Meta just announced they're laying off 20%. So, dude, I got to tell you, ever since I started real estate, it's been just like every TikTok and Instagram, YouTube video since I've been there. I've never had any failures. Everything's been perfect, smooth sailing. And it's like a dream come true when it comes to investing. Is that your same history with investing?
Yeah. I wake up at 2 a.m. every morning. I do a cold plunge. I've got 3 Lamborghinis in my garage, and I only work 2 hours a week. So yeah, it's everything that all the YouTube videos said it would be.
Obviously, we aren't very serious with that, but I think that is the story that is told on TikTok, Instagram, YouTube. And I know for me, when I got into it, I don't know, 40 or something like that. So I was a little bit older. So I had a little bit saved up, if you will, but it was still way harder than I think most people realize starting off. And you drive by these nice apartments, and my wife's like, "Why don't we own one of those? Why do we have these little crappy duplexes and sixplexes and quads and all that stuff?" And I know for me, I've told the story a few times about how I walked away from my first deals out of fear more than anything. But even the first few properties I bought, not that I bought a ton, but I've never, you hear of home runs, grand slams, and maybe I just got in it at a bad time. But if you're getting in investing today, real estate, business, all that stuff, you're not going to hit a home run your first time. And I think that is what the internet teaches you.
Well, I mean, someone's going to go in the comment section and say that their first deal was a home run, but for anyone that I've seen that didn't lose their ass on their first deal, the next five were pretty difficult. And so I definitely experienced it. And even doing all the research, like I did 2+ years of research before we bought our first property. I thought that I had eliminated most of the risk, and trial by fire until I did it. There was so many things that I hadn't even considered, like a collapsed sewer line. The first duplex that we bought, we didn't do a sewer scope. We did a full home inspection on the duplex and didn't know that the sewer had collapsed and there were tree roots going through it and backed up into the unit. We just got done renovating this unit after 30, 60 days of owning it, and sewage backed up into it. So we had to file an insurance claim, renovate the whole thing. It was a nightmare. I mean, I'm the only one I know that has flipped one unit 3 times in less than 6 months.
Yeah, it's for me, I didn't have anything catastrophic like that, but it's just you mentioned all the time the unknown unknowns.
Hmm.
And when I first bought my first stuff, I was getting interest rates in the fours, and that was still fairly high
We
for
started with the wind in our back, and it was still hard.
what do you mean?
Like with the low interest rates, and the wholesalers were really active, and like so we had a lot of advantages getting started. It was still difficult.
Yeah, and it's not like that now, but I just it's still like I see that. Not as much as probably 2020, 2021, 2022, but it's still, you know, do a wholesale deal and get $30,000 or flip this property and get $30,000. And I was talking to Sean Gomez the other day. He's like, dude, I can't find properties right now. It's, everything's $30,000 over. And too often that's what it is today. So if someone's getting in right now, what kind of mindset do you think they truly need?
I think they need to be constantly evaluating the opportunity cost of, if I invest in this single family, which is Sean's a perfect example of that. Like I talk to him regularly, and we're talking about partnering on bigger deals now because the smaller deals, it just doesn't make sense. Like the sellers are pushing all the margin out of it, and the construction costs have gone insane. Like we've got to change the strategy. And so if we were pigeonholed to, I remember getting started at the real estate events, and they're like, it's almost like you have to wear what you do on your forehead of like, I'm a flipper, I'm a buy and holder, I'm a whatever. And they want to stick. It's, I'm an investor. I follow what makes sense. And I had a conversation the other day with a guy. He's got a, $5 to $10 million portfolio. And I told him that as a real estate guy, someone who's liquidated everything, put it all into real estate, I think you should sell all your real estate and pay your capital gains taxes and put this money into treasury bonds because you get a better return than you're getting right now. And how insane is that? And pattern disrupt to hear a real estate guy say, go buy super safe, low risk stuff because the deals that you have them in are not working. And so he's ready to pivot because of that and look for better opportunities, multifamily, commercial, things that make more sense for his goals. So I think to answer your question, having a good understanding of everything and not getting scatterbrained and be like, I just bought a single family in Atlanta and then I bought a duplex in Montana, and like you do all those things, like that's not diversification. That's just being scatterbrained. But having an understanding of the different sectors and knowing when the time to pivot is. There's, real estate cycle, 7 years or 13, 15 years, whatever, for this most recent one. Different asset classes make sense at different points in the market. So follow the market, be ready to pivot when necessary, but always be looking at your return on equity, not just picking a metric and say, I only look at cash on cash. I only do deals where I get 10% cash on cash. Like I think that that's just flawed metrics.
Do you really think treasury bonds is a better investment right now?
No,
You kinda had me
no.
miffed whenever you said that.
Yeah, no, I would not say that they are a better investment. I think the performance, evaluating the actual performance of this particular portfolio, I said that you would have been better in treasury bonds because he was just not earning good money on this portfolio. So for if you were asking me honestly, what should you put it in? I mean, looking back, I wish I would have put more money into the S&P because 2024 and 25 was what, 13 to 16% returns.
Yeah.
It's better than a lot of my real estate deals are doing. Not better than my best real estate deals, but better than a lot of them.
Yeah, but I guess I'd push back on that because it depends. You have to pay capital gains on that. Real estate saves you from paying taxes. So I think it's hard to evaluate a deal in that limited mindset of what's my cash on cash return or
Hmm.
what's my, because you can't do an IRR. I guess there's probably a way that you can do an IRR calculation and factor in your tax savings.
Hmm. I
But
have calculators that do it. And so for example, this investor 1031 into this package, and so his basis is nothing, and so he's not getting any tax savings on it. So the only thing he's getting is appreciation, and
well,
because
he's getting tax savings from not having to pay it when he sold.
right, so he's getting the deferred taxes of the 1031, but not on, he doesn't get any depreciation benefit for the current portfolio. So the only metric that matters for him is his cash on cash and appreciation and debt pay down. So if his debt pay down is 3 to 4% per year and his cash on cash is 4% per year, and he has a super high risk portfolio, super high risk meaning North Omaha single family package, like all
Mhm.
scattered individual houses, when one furnace goes out in a 1960 building, which happens every year, all the cash flow for that unit is wiped out for the year.
So why did he 1031 into, what was he in before that he 1031 into single family North Omaha houses? Because to me, that's where you start off at, is buying single family North Omaha, South Omaha houses, not 1031ing into something like that.
So, I mean, without getting into the particulars of this investor, he was sold a package that happened to meet the criteria for how much he was 1031ing almost perfectly. And he was sold this vision of being hands off and passive. And I talked to him the other day. He says it's basically like a full time job. Like he's putting,
Local or
nope, out of state. And so, and it's not easy to get out of those. Like selling off, a couple at a time here and there. You pay the capital gains on just those, but it's a very difficult situation to get out of. And so he was sold a vision, and the vision didn't come to fruition.
so I just want to bring that up in a different context. I think it's a good case study, if you will. If you're 1031ing into something, you want it to be, my 2 cents is, less trouble. And if you, I don't know what he was in before, but why would you go into more single family homes? And I think it's knowing knowing what you're doing, and going back to my first thing, like not knowing what you're doing and the mindset of getting out of stuff like that. That's like my mind is racing. Like the bad investment advice that I feel that is. I mean, I don't know
Hmm.
the guy, I don't know his situation, but that just seems like a horrible investment. Like I wouldn't want it.
Yeah, and it was a horrible investment, and he admits that it was a horrible investment. So the biggest thing in the last 3 weeks that my wife and I have been discovering is how important the incentives that you give to your advisor are to the credibility of the advice they're giving you. When the advisor has an incentive, I mean, perfect example. If you ask the doctor who has a chance to make $400,000 this year, should I get this elective surgery? They're probably going to tell you yes, you absolutely should. They have a vested interest in telling you yes. When your investment advisor or your real estate broker or your property manager or your contractor or whatever has a vested interest, and I mean, look at on the plumbing side. If someone's panicking because there's a leak in the house somewhere and they can't find it, I mean, you have a vested interest in selling them your $15,000 package of redoing all the pipes. But if someone's really protecting their interests, they'd say, let's shut the water off. Let's go figure out where this leak is coming from first, right? And I'm not saying that you're doing that stuff, but you have a vested interest and people are calling you as a trusted advisor, but you also need to run a business. And so I think that people perform or they act on their incentives, not on their values. They can tell you that they're integral. They can tell you that, they want to do what's best for your money and all that stuff, but follow the incentives.
Yeah, I maybe I'm just naive or have a different mindset there, but I think doing right by the customer keeps them there long term. So yes, you can do one package with that one person. Say it was $1 million package. I don't know what it was, but say they bought, 100,000 homes. That's a one-time thing versus you put them in a good property that makes money, and then they have more money to reinvest the next time. So you get them a good thing that's putting off 10% IRR a year or whatever, cash on cash, whatever however you want to calculate that. And now they have $100,000 the next year to reinvest, and they can buy another $400,000 house or something like that.
Mhm.
And your long term, so marketing metrics, you have your customer acquisition costs. How did you find them? And then you have your lifetime value. To me, that is the most important when acquiring a new customer. Like we run a lot of LSA leads. That's kind of our one of our marketing channels right now. So we know that we get 80,000 or $80 for a LSA lead or something like that. What is our It's not that first deal that matters. It's really what's the lifetime value of that customer over that period of time. I think that's where people get lost is they just look at the near term. Okay, so we got this customer for $80. We need at least 5x ROAS on this investment. So I have to sell them at least $400 to break even so that I can remarket and remarket.
Mhm.
Versus, okay, maybe I only sold them a $300 service package or whatever it was. I just fixed a leak or something like that. I only got $300, but they trust me. And next time they're going to come back and they want their kitchen remodeled or the bathroom remodeled, and I'm going to get a $3,000 thing.
Mhm.
And when you're telling that story, I just think people think too nearsighted for it.
Absolutely. And a good example as a real estate broker is, I mean, I've told many clients that had bad experiences with their property management or bad experience with a contractor and they're losing money. And they say, I want to sell it, just get rid of it. And I've told them, like, if you truly want me to list it, I will list it for you. But I'm telling you right now that you will lose money. We're going into November. It's not a good time. Interest rates just spiked. Whatever the story is, I don't think that you're going to get the best value for it. And like right now, we have a property listed for a client, and he wants it sold ASAP. I I mean, I have a vested interest in getting it sold as quick as possible. Like if I want that commission, I'm gonna tell him, all right, yeah, let's drop it 20,000 and we'll get it sold quick. But that would be lying to him because your mortgage payment's $2,000 a month. Hold on to it for a month or two, and I'm gonna get you the top dollar I can. Like 2 months tops. If it has not moved, and I give performance metrics of after 6 weeks, if we haven't gotten this many showings, then we drop it 3,000, something like that. And worst case, he's out 5,000. But if I go and drop it 10,000, 20,000 right now, just so that I can get a commission sooner, I'm giving him advice based on what I'm incentivized to do, which is get paid sooner.
Yeah, unless he has some emergent need for the money, that he, a big investment. He has to
That
pay
changes the risk.
pay
Yeah.
pay for a doctor's bill or something like that, keep out of jail, or something that's going through a divorce and has to sell it. Like there are, I mean, that's where wholesalers come into play
hmm
with all that. But
Well, I sat down with a financial advisor today, just have coffee, and one of the things that he broke down for me, which I'd known in at a high level, but he really broke it down granular about how as a registered investment advisor, you have the fiduciary responsibility of understanding everything about a person. You have to know their life story. You have to know their age, their relationships, like all the factors that go into making a financial decision. You have to have a good understanding of, and you have to have it documented so that if something came up like that, like you said, legal risk or doctors or anything like that, they can't come back and say, like, he helped me make a bad investment and I really needed to pay this doctor's bill. Now they're coming after my house. That same level of fiduciary responsibility should be acted on by everyone that has, stewardship over money, but it's not. And part of, like I keep saying, is that incentive problem is if someone has contracting in-house, they're not going to go out and give you three other bids to go get opinions and make sure that you actually did need to go put $30,000 into your building. They're gonna send you a bill for 30,000. So the incentives, and we've talked about this many times, but the love of money is the root of all kinds of evil, right? I would say that taking advantage of people who are trusting you with their life savings is an extreme evil.
unpack, what do you mean?
I think it's evil for someone to accept investor money and then go and spend that investor money doing services that probably weren't necessary, or at least should have gotten a second opinion from someone other than you to verify the cost, verify whether it needed to be done or not, or even just to integrity check to see if there's maybe a better way that you hadn't considered.
Yeah, I'll say it's a double-edged sword because as I hear you saying that, like I look at it from the business owner standpoint, and we try to do things with integrity. Like when we preach it every week to our guys, like we aren't the high pressure sales plumbing company. Like we're not gonna sell you, the kitchen sink when you don't need it type thing. But then it's also frustrating when you go in honestly, and then they just try to, well, I need 17 bids and all that stuff. So like, you feel like you're wasting your time, and so I don't know. I don't know the answer because it is hard.
It is frustrating. And what I loved about what you said before is that you're focused on the lifetime value of that customer. And if you show them integrity, maybe the next time that they need a water heater, they give you a call first. Maybe they don't. But what's going to keep you up more at night? That you let money come priority to your integrity, or that you missed out on some potential income? Knowing you well enough, I know that it's going to be the integrity side. And so I think that continuing to treat people right, do the right thing, be honest with them, is going to earn me more business in the long run. And it has in real estate. I mean, the people that I've told not to sell, when sure, I probably could have used another commission. I could have been like, yeah, that is garbage. Let's sell that and we'll 1031 into something else. And we get that side, I'll get buy side, I'll get sell side, I'll get, all that good stuff. But I've told them, no, you should hold on to this. Let's pay down that note a little bit more and we'll reevaluate the market in the spring. And then they refer their siblings to me and they refer their parents and their friends and all. So I turn a potential sale into 7 other sales because I chose integrity instead of greed.
So for a new investor, I want to kind of go back to that guy. He wasn't a new investor, but just from my point of view, the 2 minutes that you gave of the story, he's in a bad situation. Maybe not bad situation, a not good situation. He could be making more money on his money. What is the mindset that you have to, like the Angela Duckworth's got the book Grit. Like,
Mhm.
how do you stay gritty enough to stay in it when you're like, dude, I could have put this in 5% bond and made more money off from it, or I could have put it in the S&P and just paid the capital gains, and I'd been better off. What? How do you do that as a new investor?
Mm. I think that for all the seasoned gray-haired real estate investors, we'll say the same thing. Is there's probably very few properties they regret buying because they either made a profit or they learned a lesson, and that lesson saved them somewhere else. And I can tell you, even on my worst deals, like deals where I was paying 8, 10 grand a month in hard money cost because the lender that told me they could refinance me bailed in the last minute, and I got stuck holding the bag. I still wound up making out okay on that. It sucked in the meantime. I was running lean at that point. Like we were ramen and rice for a while, but we came through. We learned some things. Next deal that I do like that, probably have a few more lenders lined up, and I'll probably have a couple other exit strategies lined up. And even if I'm sure that this is my strategy on something, I'll probably have third and fourth contingencies just in case.
So you said something, and some of the people I've talked to, coaching stuff like that, they always say you need three options. Every deal you go into, you need three options.
Mhm.
Your primary option, hey, I want to flip this property. Okay, so flipping or wholesaling is my number one choice. Okay, I can't wholesale it. I got it at a good price. I'll flip it. Okay, flipping's not working. I can't sell it. The market changed right away, and go into um, hold as a rental or something like that. Like you just have to be able to, I think, pivoting and not getting disgruntled with the position that you're in. Like I said, at the end of the day, I think it comes back to grit. But what is grit? I think is the question that is harder to define.
Yeah, and I think that on small deals it works out like that. You can have those multiple. I could just assign this to someone else. When you're talking about a 1 to 10 unit, like sure, maybe you have 4 or 5 exit strategies that all could potentially work. If I try to flip it and it doesn't work, I'll just keep it as a rental. And if I do all these things, when you get a 50, 100, 150 unit apartment building, like good luck trying to wholesale that. There's people that do, I'm sure, but that's not the most feasible exit strategy. So I think,
But I would argue if you're doing a 50, 100 unit, you should be, contrary to Grant Cardone's philosophy, go out and buy a 30 unit.
mhm.
But you should be more seasoned to do that because you have to take, starting off with a single family and growing your way up it's a learning lesson. Like you said, it's lower risk. Like, yes, I might lose $30,000. That's some people, their life savings.
Mhm.
So I don't want to minimize that, but it's a lot better than losing $3 million.
Oh yeah, no, of course. And to be fair to Grant Cardone, that's exactly what I did. Is I bought a single family, then I bought a duplex, and then my next deal was a 31 unit. And the biggest mistake I made on that deal is that I didn't take control of the property management soon enough.
But you did it with partners, so more seasoned partners, if you will. So you leverage their experience to be able to get a 31 unit. I've only bought stuff myself. Like I never leveraged somebody else's time, money, any. I mean, I used the bank, but leveraging it there. But
Hmm.
I've never partnered with somebody to leverage. So I think it's a little bit different. It depends on how you're doing it. So
Yeah, absolutely.
anyhow,
And I mean, buying a portfolio yourself, you're going through a lot of those growing pains alone. That's a tough place to be in, especially when the financial projections that you had. You come home and you got to talk to your wife about why it's not bringing in $10,000 a month like you thought it would. So I completely understand it's a completely different animal. Um, but my point in bringing that up was that even when the strategy was very clear, the financing was in place, all the money was raised, everything went according to plan. The execution didn't follow through, and the learning lesson there is make the change sooner. And so my point is that a deal like that, it didn't have two or three exit plans. There was one plan, and when the plan wasn't being executed on, you got to find a solution very fast. We let it linger for far too long.
yeah, I'll use my first deal as an example for that. So I bought a duplex. I bought a duplex and a quad at the same time, but we'll talk about the duplex. I had a 30-year loan on it, conventional loan, investment conventional loan, and I rehabbed it. Markets were changing, but my first year in this duplex, renting it out on Airbnb in 2022, it was probably in 9 months, 8 months, I think it was. I made $60,000 in 8 months on Airbnb. So when I refinanced it, I was looking at what I did last year in 2022, thinking I would carry forward in 2023. 2023, full 12 months, I made like $50,000. Still decent, but November hit and Airbnb in Omaha basically became non-existent for where I was, like
Mhm.
the market I was in for Airbnb. And so November said dormant, December said dormant, January basically, I'm getting one booking, two bookings here and there, but it completely changed. So I switched to midterm. Midterm did all right for a while, and then I got tired of it. But so I was making a little bit more money, but I refinanced it off from a pro forma of Airbnb. Now I went to midterm. Now I went to long term, and I've just got traditional renters in there. So I'm losing money every month. Now I pulled all my money out at the beginning when I refinanced it, so it's a little
Mhm.
like, okay, so I lose $500 a month. Is it worth it? Probably still, but I can spread that across the portfolio and it's okay. But still, at the end of the day, I'm losing money on my first deal today because of a decision I made 3 years ago off from a pro forma that
Made sense at the time.
made sense at the time, but I wasn't thinking like, what if this changes? I only went in with one
Mhm.
strategy, and that strategy was Airbnb. And yeah, when I was making $60,000 a year on a $200,000 duplex, it looked really good, but it's not quite there anymore. So,
Mm.
have you ever had a deal like that that you screwed up, not something else, some other management decision or something, just that you owned and screwed up?
Yeah, yeah, I can think of many. And so, I mean, sometimes it was not sticking to contractor timelines. Sometimes it was the financing. I mean, sometimes it was I overestimated the rents that we would be able to get. Well, one of them was I overestimated how quickly we could get the rents up to market. And I stress tested it that, even if we push them up to market and for example, one property had average rents of like 675. I estimated that in 12 months we could get them stabilized at 850. Like that's what the market could hold. It made sense on paper. It took 42 months to get them stabilized above 800. So I completely underestimated how quickly we'd be able to get them stabilized there.
What
That
was the why? Why did that happen?
well, I mean, a lot of I mean, on the asset management side and ownership side, you you don't really see the conversations that happen with property management. Like you see the reports, you see numbers, metrics, but getting into the weeds about like the individual stories and people have been there for 5 years and their rent's only gone up $50 a year, something like that. 5 years later, you realize that they're 30% under market. That's super common. And so instead of kicking that tenant out who pays their rent all the time, you give them a $100 increase. So now from 675, they're at 775. They're still whatever that is, 10%
50,
under,
70, yeah.
yeah, 10% under market. But when that happens across a bigger portfolio, I mean, the numbers are drastic.
Yeah, and I mean, I don't know what you're talking about market size, but or portfolio size, but I found that it's a lot harder. Well, for one, rents quit climbing. When I got in, they were boom, 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 and then they kind of dropped down. I that from my perception is they dropped down a little bit. But how do you how do you make that work? How do you run with it when things are hard like that? That's where I struggle with the day-to-day management of it, if you will. If that makes sense. I kind of
So,
rambled.
so how do you stay, I guess, stay involved when things don't go according to plan? Is that
Yeah,
what
I
you're
mean,
saying?
like for me, I got so many different things going on. Like I got my real estate, I got my uh, family, I got the plumbing business. Like I can't stay on top of everything. I can't. I probably should, but I don't stay on top of where's my rents at, market's this, what other things we have. So I know that's a struggle for me. Like I just within the last week or so, I've been talking to my property management, like how do we do this? How do we, and it's a struggle. I mean, I sent you a text. Do you have uh, renometer access? Stuff like that.
Hmm.
So it's that was me trying to get ahead of it, or because going back to that one unit, like I'm losing money, so I market rent for those. How do I in other areas that I might not be? How do I get more to pay off that $500 that I'm in the hole every month? So it gets hard across, like you said, across the portfolio.
So to answer your question, I think if you can't allocate, you're stretched so thin that you can't allocate 2 hours, maybe 4 hours a week to go over specific KPI, then you need to find someone who has that time. And that's a who, not how. And that's part of why we started this new business was, I mean, we managed for hundreds of investors before. Most of them are the same. They bought some properties, they thought they could be passive on it, and then things just slipped through the cracks. They didn't realize that these contractor bids were coming in so high. They didn't realize this unit sat vacant for an abnormally long time. And it's not that it's not always malicious intent. Like sometimes it's just freak circumstances that you didn't know about until the knife's already falling. And so we started an asset management division, which for owners that want to be hands off, they pay a fee. They pay a fee or equity in their portfolio for us to manage those things for them, to answer the phone calls, to, at 1 in the morning when a decision has to be made on, whether to send out an HVAC technician at $1,100 or if we can find them a hotel room and decide in the morning, like that decision has to be made. So either you're rolling out of bed, with an upset wife answering that phone call, or you hire someone that does. And to take it back to the investor from earlier, he got into this with the intent to be passive. And eh, I mean, real estate, for those of us who own it, no, it's anything but passive. You have to be paying attention to these things. And I love traction because that level 10 meeting should be happening with your property manager. And if it's not, things will slip through the cracks. The more units you get, the more drastic it'll become. And right now, that $200 a month that you didn't think was a very big deal, when you apply that to 100 units, and now you've got a $400,000, $500,000 leak at a six cap, you just lost over, $2 million in value in your portfolio. $500,000 across a 100 unit portfolio at a six cap. What is it?
I'm just trying to your math. Like, how does a leak turn into a five hundred thousand
I don't mean,
dollar?
you're thinking in plumber terms. I don't mean a literal leak. I mean
Okay,
a leak of money, a
okay,
leak of not paying attention to things, of vacancy creep, expense creep, of unit turns costing too much, of you
okay.
didn't realize that your property manager placed 15 bad tenants last year, and you had to pay for all those evictions and those unit turns and all that stuff. When that starts to cost you $300,000-$400,000 a year at a six cap, what's quick math there? $400,000 at a six cap, that's over $6 million in value you just lost from your portfolio.
Yeah, but I would argue, yeah, that's a hard one because most people that are trying to sell are paying more attention. I would say the people that pay less attention are the people that are buy and hold and plan on holding forever because they're just worried about getting passive money at the end of the day, which becomes a problem because that affects your mindset. And it's kind of my overall, I brought up grit and all that stuff,
Hmm.
in this, but your mindset and how you manage stuff. You mentioned the 31 unit and not taking over management in time. Like that was your mindset. Like you had a different mindset. You were a slow moving mindset. And
And I was tracking the numbers full time. That was my full time job, was looking at the numbers and reading work order reports and all that stuff. And I didn't take action soon enough. And I mean, we've had this happen on 50, 70 other units where we should have fired the property manager sooner. And then we put a new property manager in, and they sucked, and we fired them very quickly. It was a good decision because we didn't lose too much money. And so, but you asked earlier, how do you stay strong when those things happen? I know that if we just hold on to the properties longer, like sure, I wanted a 4 year exit. I wanted that perfect burr. I wanted to be able to raise rents and rehab some units and get all my money back out quickly. But then when these things happen, you realize, okay, so we're just gonna have to hold this property a little bit longer, longer than we intended. And if you have, like you said, I do everything raising capital. So if my investors are aligned with what I'm saying and they trust that we hit some hurdles and we're just gonna have to hold this property longer, then that's what you do. I mean, in real estate's very forgiving in that way.
it is. And that's kind of what I was saying. Unless you're planning on selling, you didn't really lose $6 million. Are you
Oh
leaking?
yeah,
Are
okay,
you leaking month to month cash flow? Absolutely.
true. If you catch it, if you don't catch it, if you don't start spending the time necessary to start clogging those leaks, or whatever the plumbing term is, I'm not up to date on that terminology, but if you start fixing those things, then yeah, I don't lose that value. But if you start bleeding out to the point where you have to sell or you have to get out of your, I mean, most of our notes on all the guys I know, they're on 5 year balloons. If you let it bleed for 4 years and then you don't do anything for the last year, you're going to lose out on value.
Because the bank won't refinance, or they'll
Eh,
refinance off from the actuals versus what you
Watch,
could be doing.
watch how hard it is to refinance something that you have a $2.5 million note on at 4.5%, and the NOI drops, and then you try and refinance it at 7%. Guarantee you don't have the debt pay down to justify refinancing it. You're going to have to put cash in to refinance. Imagine, I mean, if you had to go put a $500,000 into the deal just so that they will refinance you at a worse rate where your monthly payment goes up significantly and you're already losing cash flow, you have to fire sale. That's how you lose value.
And a lot of that's happening today. And
Not as fast as we thought.
I mean, I would.
The banks have been kicking the cans the last 12 to 18 months. They've given 1 to 2 year extensions. Everyone and their mother refinanced between 2018 and 2021, right? 2022, 23, the rates started going up a little bit, and then 23, 24, they went up a lot. Everyone and their mother had a 5-year note in between that time frame. 2026, all those notes should have matured already. So why haven't we seen all the fire sales? Why don't we see auctions everywhere? Because the banks are giving 12 to 24-month extensions at more favorable rates. Sometimes they go up a little bit. Sometimes like, well, we have to move you to 7%, but we'll do IO. We'll do interest only. And so they're kicking that can. So hopefully you'll be in a different position. But eventually it's going to fall. If
Yeah.
people don't start taking control of their properties and clogging these leaks.
So how does a new investor do that? Like, if you're starting out, I, some of what you're saying is like more for the seasoned investor, but I guess I'm just looking at the new person starting out. I'm been doing this for a little while, but I wouldn't say I'm a seasoned investor from that standpoint. Yes, I've bought a couple properties, a couple plumbing companies, stuff like that. But
You got half the grays.
huh?
So you got half the grays of a seasoned investor.
Yeah. But how do you weather that? How do you even know? And go back to the joke we made at the beginning about how everything on TikTok, everything is perfect, but it's not.
hmm
And so how do you even when everybody's telling you it's perfect and you don't have to do this and it's passive, like how do you do that?
I think the best advice there is find a trusted advisor that doesn't have a vested interest in telling you sweet nothings. Like if you have a property manager who you're paying to manage your properties and you ask them how are my properties performing, they're like, "Oh, they're great." Because if they tell you they're garbage, then you're going to fire them. So why would they tell you the bad news? Unless they tell it to you with a plan. And if someone says, well, these things aren't going well, but this is what we plan to do about it, then that's a great manager and they should call me because I will hire them. But if you don't have someone who's completely unbiased and can look at your performance and say, this is where you're missing the mark, or these are the things that are slipping by you, you need to tighten up here, then, I mean, I think anyone, regardless of experience, needs people in their corner that don't have a vested interest in their success or failure.
So that comes up to the question of how do you find somebody like that? Because this is my problem. Like I'll pick on you for saying that. Like, yes, it's easy to sit here right now, sitting in a chair in the backyard and say that, but it's a million times harder. Like, and that's the problem with social media. We say these things, find a trusted advisor, find a good property manager, find a good asset manager, find a good financial advisor, find a good doctor, find whatever. Like we say all these things, but where are they? They're not on every street corner. Like it's so easy to say, but so hard to do in practice. And that's my problem with all this is that's why I, kind of picked this topic is yes, you say that, but then do it. That's your 31 unit. Oh, we should have fired the property manager. It's easy to say, hard to do. I guess is my pushback on that.
Yeah, I think I'd agree. It is hard to
So
do.
how do you do it?
Finding people that, again, have more experience than you or just are unbiased. Because, I mean, the
Yeah, but I can say
most,
whatever I want. If you hire me for something, hire me for plumbing, I can say whatever I want. I can say I'm the most honest plumbing company there is in the world. That doesn't make it true. How do you find that person? Like it's easy to say, but they're not on every street corner. Like you can't health. I use health as an example. Like I feel like I have a pretty good doctor. Draws my labs every 6 months. She's on top of stuff, X, Y, and Z. Looks at things more holistic, more long term than just fixing the immediate problem. But if I'm completely honest, she's probably not the best. I like her, go to her, and all that stuff. But how do I find somebody better? If I had a bad doctor that I liked, that I trusted, but they're bad, how do you know that they're bad?
Mm.
How do you know that your property manager is bad? How do you know that your asset manager is bad? How do you know that your business broker is bad? How do you know that your insurance agent's bad? How do you know that your attorney is bad? How do you know those things? And I think that's where the struggle comes in. Does that make sense?
Absolutely. I think that's 100% fair point. What I'll ask you is, how many times in the last week, 2 weeks, month, 6 months, year have you said that statement right there? I'm looking for a doctor that can be unbiased, that, can provide me XYZ. I'm looking for this. How many times have you said that to anyone else in your circle or out?
Well, I'm not looking for a doctor to be fair. Like I said, I
Right. But
I,
but
I
your
think I had
example was that I have a doctor that could probably there's probably people out there that can outperform them. But part of the reticular activating system that we've talked about many times on this podcast is you find what you're looking for, right? And if I'm a new investor and I say I just bought my first duplex and I'm looking for someone that can tell me three good plumbers, I guarantee you'll get 50. You go into the RIA chat and say, I'm looking for this. I need to get a second opinion on plumbing. Can someone make some recommendations? And the people that complain about it after the fact, oh, this guy screwed me, all that stuff, they're probably not asking the right questions. And the best advice that I've gotten has been from getting into rooms with people who have already done the thing or hiring someone's advice that has no emotional opinion of what I'm doing. They have no vested interest. Hiring a coach, best investment. Because when I go to him and I say, like, I'm stressed about this insurance stuff like that. Okay, how many insurance agents have you called? I don't know, 5. Okay, why haven't you called 20? Like, if this was a real estate deal, you would have called 20 lenders already. So why didn't you call 20 insurance agents? Like, there's nothing worth stressing over because he's not emotionally involved. I'm emotionally involved because I just got 5 no's. But that's my point, is that putting it out there and finding someone who's either got the gray hairs to show for it or has done the thing before, well, I guess those two are the same thing. But I put it out there that I'm looking for this. I need help with this. And not being so caught up in the highlight reel like we started talking about. People, they just have this ego of like, I'm great at everything I do. Everything I touch turns to gold. Bullshit. Everybody needs help at every level. I work with people with, 9-figure net worth that still know that they need to ask for help. So if you're looking for a better doctor, or you're looking for a second opinion on plumbing, or you want to know, should I sell this real estate deal or not? Don't take the one person's advice who makes money on your decision.
So one thing I've noticed a lot of times it's not the one person. Like if you give me a recommendation, a lot of times that's not the best recommendation. It's the second, third, fourth recommendation all from that recommendation. Like, hey, I need a good plumber. And then you ask them and they go and like, oh, it doesn't work out, but they refer you to a good roofer. And
Mhm.
then that roofer refers you to somebody else. And then that other person refers you back to another plumber. And then that's the best plumber. It's weird how that happens
Yeah,
from my experience.
I mean, I've seen that a lot. Especially, I was at a networking event the other day, and I asked the host, like, "Hey, I'm raising capital for this, and who should I be talking to?" And he made the introduction. He's like, "Go talk to this guy," and this guy, he's looking for his own deals. And so I was like, "Okay, well, let's talk." And if that leads to a different type of conversation, or I can service it, elsewhere, then by all means. But the best, have you listened to Pitch Anything by Oren Klaff?
Mm.
Great book. More on the capital raising side, which I know is not your bread and butter. Like, I nerd out on that stuff, but he talked about at these networking events, you should be looking for $2,000 conversations. Who can I meet with here that will make me another $2,000? And if you can't find that person, find a way to be a $2,000 connector for someone else. And I think that if you truly were looking for a doctor that gave you XYZ, whatever you're looking for, and you were asking people for it, if you tried to, connect other people for health advice, or hey, I'm looking for a new gym. Do you know anyone that's, a trainer that could, if you can make that connection, God will reciprocate by finding you that doctor somehow, because you focus on being selfless and putting someone else's needs first. And that's what I've seen happen time and time and time again. So first thing, if you really want to find something, or if you really want to do something, you'll find a way. If not, you'll find an excuse. Jim Rohn said that. But also, if you're really seeking for some guidance or some connection or something, be that connector for someone else and you'll be reciprocated.
I agree. I think that's probably one of my biggest downfalls is I don't network in a proper way, I guess, maybe. I don't know. But that
Why?
why
Why do you think that you don't network in the proper way? Like what is the who defines what the proper way to network is?
I mean, I know there's a proper way, but I'm not always looking for like I'm more of a if I connect with you, I connect with you type person versus how you said the $2,000 person and then connect. I guess I just don't think that way.
Hmm.
So I guess I'm going off from pitch anything, whatever you're saying, like the traditional way of you saying it. Like I'm more of a go somewhere and have a relationship. You meet 1,000 people and you have a relationship with one versus meet 100 people and then try to connect them. If
Oh, absolutely. And I completely agree with that. Is I mean, since my wife and I started in this business, we always said that we don't want to be the realtor that, does 100 deals a year with one person each and then see again in 7 years. I would much rather have 5 to 7 investors that buy 10 to 15 deals with me a year. That's I'm good with that. So when we're going to these meetings, I mean, granted, it's different now that, we're raising more capital and doing other things because I mean, before if we're just doing real estate sales, like that's our sole focus is I need people to buy and sell with me. But now we have so many different services that we can offer that we can find a way to add value to anyone, even if it's just unbiased advice, which is why I said about going to these events and finding someone who does not have a vested interest in whether you succeed or fail. Find people who are completely unbiased and can give you advice. And I've seen interviews with several billionaires that talk about just who is it? The um, the Walmart guy,
Walton,
Sam Walton. People have said they got into a room with him and they were so interested and they wanted to hear his advice and all this stuff. And the entire time he just asked them, "What do you think about this? I've been thinking about doing this. What do you think of that?" Because he's curious and he's looking for someone who has they will not benefit or fail based on the advice that they give him. And so that curiosity of just constantly seeking out unbiased opinions is probably the reason why he's done so well for himself and his family and, many other families. So we started this podcast talking about how the gurus don't have it all right. And
I'm not saying they don't have it all right.
right, but it's not the whole truth.
It's a jaded it's a jaded perspective of the truth based on their lens that they see things through because they've been in it so long, I would say. Anyhow,
Yeah, and not fair of me to say whether they're being truthful or not. I have no idea. But I know that if I hear something on YouTube, I'm probably going to go get a second opinion and a third opinion and a fourth opinion. And I'll probably call 15 other people and ask them, "Hey, I saw this thing." And case in point, like I've had this idea for an investment philosophy. I'm talking to everyone I can about it. I don't steal my idea. I don't care. I have an idea. I want to find the blind spots. And right now it's Claude. I'll go into Claude and I'll be like, "This is my idea. This is all the things I'm thinking of. Show me my blind spots." And it'll kick it down, you know, faster than Ryan will kick me down and when I say something false. But I'm looking for Like I'm not so egotistical that I need someone sitting there telling me, "Oh yeah, you're great. That's a great idea." Like, because when I fail, I'm the one holding the bag. I'd rather go out and talk to people, which is why you and I get along so well. Is because there's no fluff. Like, if I'm wrong, I want to be told I'm wrong. I don't want to sit here in this delusional world that everything I do is great and I have no idea why my deal just failed. I'd rather talk to 15 people that can give me ideas on how to do it better. And so, to that new investor, take the motivation that comes from those YouTube videos, but weigh it against someone that doesn't have a bias. You know, if they say, you're going to do great, just buy my course. I'm not saying that course is bad. That course probably is going to teach you something that you didn't know before.
There's probably no bad courses.
Yeah, yeah. I mean,
I
well,
would say.
yeah. I mean, unless you've already taken the 15 other courses that are on the same topic, like then yeah. I mean, I think that anyone who loves the consumption of knowledge is going to be better off for it. But find people that have either done the thing or can give you an unbiased opinion on the thing, and that's where you're going to see the best results.
I would probably agree on that. And as far as this topic goes, I don't know if I got much more to add. I think I I mean if I'm just frank with I see so many people struggle in this world, and they say we're in a K-shaped economy and all that stuff. And I mean, we don't have a big podcast, if I'm frank, and but I wish more people would listen to us just from the standpoint of like we're I feel we're relatable because we're just two dudes sitting in the backyard today, you know. But
Who clearly don't always have it right.
no,
I mean, and but we also go back and we look at our old episodes and we say, what did we get wrong from that? Like, what have we learned since then? We make predictions, right? How arrogant is it to make a prediction and put it on YouTube with billions of users, like expecting to get proven wrong? But we use it to document and go back and reference and be like, here's what we got wrong. Here's what we thought then. And not that I'm some wise guy now, but here's what I've learned since then.
no, and I think that is the point. Is like I don't have it all together. I'm whatever 45 years old, and like, I don't have it all together. Like I don't know everything, but I'm constantly trying to learn and trying to find an advisor or find a group of people or find a mastermind or whatever to get in the room with people that have done more and stuff like that. And I think that's what you need to do. You need to not be scared. You need to, and what I was getting at is I feel like people like I want this podcast to reach somebody that hasn't tried something, that they're scared to. They're excuse me. They're 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 on the cusp of should I do this or should I not do this? And the answer is yes, do it. Like too often we think that a W-2 is secure. Meta just announced they're laying off 20% of their workforce.
Mm,
Like a W-2 isn't secure.
true.
How do you secure your future?
Mm.
How do you bet on yourself? And I just wish more people would listen to this and just say, you know, these two idiots are right. You know, like I need to bet on myself. I need to be I hate to say I talk to men. Like every time I talk to ChatGPT or Claude or something like that, they're like, your avatar is men. I'm like, no, my avatar is anybody who wants to better their life. And bet on yourself. Bet on yourself. I don't care if you are here, you're in Europe, you're in Africa, you're in Asia, you know, wherever. Like, bet on yourself because that's the only way you're going to win at the end of the day. So that's my 2 cents that I think we should end it on.
No,
So
I think that summarized it great.
so well, Tanner, has been a interesting conversation. I think we were all over the place. So we started off with one thing, and I don't know where we ended up, but
I think it just goes to show that, I mean, entrepreneurship, real estate investing, it is all over the place. There's so much that goes into it, and I mean, I wouldn't have it any other way. And I think we can go deeper on that topic of should you stick to your W-2 or should you make the jump and be a solo entrepreneur and all that stuff. That's probably I'm gonna need a refill for that one.
Well, I appreciate it, and we'll have to do another episode. Till next time.